Hi, I'm Keith McCullough. Welcome back. It's Friday, and we wanted to take some subscriber questions. So I'm here with a senior analyst on the macro team. We work very closely together. Christian Drake and I actually sit right across from each other, so he asks me questions all the time. So hopefully he can ask me some of his own questions too. So let's just kind of get into it, Christian. There's a bunch of questions here, and we wanted to go through them one by one.
Sure. First question here. I'm already a subscriber to the morning newsletter. What other product would best complement this? I've been considering either the Investing Ideas or the RealTime Alerts product.
Well, with any of these products, you have to really obviously understand what it is that you're trying to find out of a product. So if you're a typical newsletter subscriber, you're probably somebody who's into reading books, into macro themes, how we tie it all together. It's our most popular product, obviously. It's kind of interesting. We don't get as many questions about this product in particular on Twitter, but that longer-term macro theme-based investor most likely would like Investing Ideas as a product next. RealTime Alerts is a signaling product. It's much more short-term. So again, I think Investing Ideas also has a macro overlay. So typically, we'll dig even deeper. So we'll show some of the notes that you and Darius and Matt on the macro team put in on Investing Ideas alongside the top 10 ideas. So there's some macro stuff and our top 10 long ideas.
Right, and this next question is related. So it says, can you explain more in depth how an individual investor should best incorporate the real-time alert signal into their larger investment process?
Right, again, that's a tough one unless I know who you are specifically and what you're trying to get out of it. But again, I'd say that there's probably three different kinds of real-time alert subscribers. There's obviously somebody who trades on an active basis, so a swing trader, a day trader, et cetera. A lot of our institutional clients look at this, obviously, in terms of their own trading desks and signaling to their portfolio manager what I'm signaling. So again, there's that short-term nature. Then there's a lot of subscribers that we have in our Investing Ideas product, again, a different product, longer-term longs, longer-term long ideas. And people will use real-time alerts to augment their entry and exit points or the grossing up or grossing down of our Investing Ideas positions. I see that a lot. And then you kind of like think through the other things. And the most obvious, I think, in terms of how I'd use it personally, is as almost like an idea generation list. So again, we have 30 analysts at the company, as you know. So you're really trying to get a peek inside of what's going on here. So in real-time alerts, you'll see that we've shorted Kinder Morgan, Weight Watchers, Nation Star, all these stocks that have basically blown up. So that gives you a peek inside our institutional business in terms of our best ideas, because I'm almost always signaling in those tickers too.
In terms of the longer-term investing ideas, for how long are the trend ranges that you give inside of that product? How long are those valid for? And second part of the question, what does it tell me if a stock closes above or below its trader trend range?
In Investing Ideas, which comes out on the weekend, comes out early Saturday morning, what you get in all top 10 long ideas is an intermediate term risk range, which is different than the immediate term risk range. So again, we blow it out because it's a longer term duration type of a subscriber, and you get this range. So what you do with that range is really simple. When you're at the high end of the range, you sell some, and when you're at the low end of the range, you buy more. And again, it's just a way to not basically swing at outside pitches. So what we don't want you to do is buy our Investing Ideas names when they're at the top end of their range, basically. Neither do we want you selling them when they're at the low end.
Okay. And I guess, so how long does, for a trend range, I know the model is dynamic, it refreshes every 90 minutes. How long is a trend range valid? Does it depend on volatility? Does it change by the day? How does the trend ranges work?
Well, on the trend range, which is in the Investing Ideas product, these are intermediate term ranges, so I reload them on Friday afternoons after I get closing prices. And the way that our model works, just to boil it down at a very basic level, the three-factor model is price, volume, and volatility. So I'm looking at an intermediate term trend duration across those three factors, and then I'm overlaying it with a lot of other macro factors in our big macro model. So again, that's how we think about that.
Okay. Then next question here. If you happen to have a loss in the real-time alerts, how do you manage that? Is there a stop loss?
Yeah. I learned at a very young age, because I was given a portfolio at way too young of an age, I think. Maybe it was a good thing, because you can make more mistakes faster. And that's really the only way that you learn how to trade. You got to learn how to stop yourself out. So I typically use a 12% stop loss on both longs and shorts. But again, if I have a 12% stop loss, that can save me from having the bigger headaches. Because what you typically see, if you look at the kind of the skew or the dispersion of your performance across a year of decision making, you'll see that if you let losers ride, those are typically, they can wipe out pretty much everything that you've done. So for me, it's still an ongoing challenge to stay with my winners and cut my losers fast. But again, you get to see me do that every single day in real-time alerts, and I think it's a good, healthy exercise for me to have to be held accountable to that in a very logical way.
Then a little bit of a longer process-related question here. How does Hedgeye weigh the sometime opposing macro and fundamental viewpoints? For example, the macro team, our current research, growth slowing, inflation accelerating, versus a retail team idea, such as RH, that suggests the tail potential is significantly higher.
Yeah, it's a great question, because this is basically what I go back and forth with. You're on the macro team, obviously, but the other analysts are bottom-up analysts. So they have a sector, in this case, where the question has to do with restoration hardware. So I think everyone knows that Brian McGough, who runs our retail team, has liked restoration hardware since it came public. So that's an interesting one, because Brian and I go back and forth, because he likes the bottom-up story. He thinks it's an endemic growth story that works irrespective of the macro environment. And at the same time, I'm leaning on him saying, hey, look, man, I think that if inflation accelerates and growth slows, that's going to be a bad thing for consumer-oriented assets, and you like a really high multiple stock here. So it provides for a good back and forth. I think you can see that in terms of me just absolutely making a decision in investing ideas, which is, I believe, restoration hardware is in our top 10. Yep. You would know that both Brian and I came to agree that maybe the macro environment is or could affect restoration hardware. You'd see us remove it from investing ideas in that case. At this point, with that stock in particular, we don't think that. That's why it's still on investing.
Okay. And then best hedge here, given your macro view.
The best hedge on the negative side.
Right.
If I was back to running my hedge fund, I'd definitely have negative dollar, long bonds, and short consumer on the other side of long gold, long utilities, and really kind of long anything that's kind of a slower growth moving animal, which would also include some foreign currencies relative to the dollar. So the hedge is the macro view. You have to first identify where you are. We use a 4-quadrant model, as you know. So again, we use 2 factors, growth and inflation, and then there's a 4-quadrant model. So in other words, you can be in 4 different places with 2 factors, and we identify where we think we are, and we know what assets do well in those environments. So currently, we're going towards the 3rd quadrant, which is inflation accelerating as growth slows. And when that happens, you do not want to be long U.S. consumer growth. You want to be, as I pointed out, you want to be short the dollar, you want to be long bonds. So that's how I think it through.
So the playbook is the anti-2013.
Yeah, it's basically it's fascinating, but again, it's very process driven. So again, we are literally saying the exact opposite of what we were saying in January, February, and March of last year. January, February, March of last year, we said the dollar could rise, interest rates could rise and surprise on the upside. You'd buy growth stocks in that environment, you'd short bonds. This really picked up steam into really the July-August period. But again, that was it. And now you got what you got, which is the other side of it.
Given the market signal of inflation accelerating, as well as the situation in Ukraine, why is the price of oil not higher? And is that signaling growth slowing, turning to growth stopping?
Well, I mean, when we look at a commodity price, to be clear, we don't start with supply and demand. Now, most people are going to be, what? This is like totally anti-Western academic Keynesian type stuff. But in commodities in particular, we fundamentally believe and have observed that production chases price, and commodity investors also chase price, and that's really the point. So we look at price first, and then we back. Obviously we do all the supply and demand work after that. So if you look at what's going on in the world currently, of course you'd say from a geopolitical risk perspective, or even from an OECD supply perspective, I believe oil inventories are tracking around 10-year lows. You'd say, oh, well, I should be long oil. Well, the problem is that if you observe price and you observe where market participants are positioned, like I was just looking at this morning, but crude oil, in terms of CFTC net, the net long position, CFTC futures and options contracts, there's a net long position in crude oil of 452,829 contracts. I mean, number one, that's the biggest ever for any contract we've ever seen. Number two, it's oil. And number three, that means that everybody's long oil. Probably for the same reasons that you see, which is, or the question implies, which is, or these trivial issues that are evidently or presumably bullish for oil. So we were bullish on oil. We recently changed, i.e. this week. and we eliminated it because it broke our quantitative signal line of 108. I think it's 108.07 on Brent. So in the face of that and everybody being long oil, thanks but no thanks. I'll get out of the way on that.
All right, and then last question here. Next trip to CT, can I DJ the tweet show? Maybe tone down the 80s hair music.
Oh yeah. We'll rock out. I'll wear the jorts. We'll bang our heads against the wall and do the tweet show together.
That's all we got.
We appreciate it. Any questions you have, again, you have the best questions because you use the product. So at Keith McCullough is my Twitter handle, and you can find Mr. Drake at Hedgeye USA, which is one of the cooler Twitter handles that we have.